Welcome to this evening's call. This is going to be such an amazing evening. I'm so excited for you to be able to hear from this man soon. So before we do, there goes Facebook behind me. There we go, we're good. Yeah, I don't know if it's the warm lighting. It is a little bit of a tan, Jordash. Thank you. I just got back from Bali yesterday. Wife and I just had our TLX anniversary trip, which was incredible, guys. I know a stack of you do have the travel pack, so you have got that coming. It may not show all the options just yet. There are 9 of them. So what started with 2 was just Mexico and Spain, which are great options. And since we've got a big team convention in Mexico at the end of the year, we wanted to go to something a little bit closer. And so it helps building good connections with the guys in IT who run the show. Preloaded all the new options to my back office and was able to go in there and choose Bali. And it was phenomenal, guys. Like, I mean, for my wife and I, first time in 10 plus years having that much time together without kids on just a holiday. Like, we went to the Croatia event last year and got 2 nights away somewhere, one full day. But this was special. I cannot wait for you guys to experience this kind of a trip. So those of you that don't know, TLX or TLE, Travel Life Experience, it's part of our IM Academy stuff. You get a free anniversary trip, basically not the flights, but the accommodation at a 5-star plus resort of your choice out of the options once you've had that membership for a year. And so we qualified for ours like back in December. So finally used it and it was phenomenal. So I won't share more about that for now, but yeah, playing that song earlier, just for those of you that don't know, we just had an IM convention in Arizona last week, and those that were there were raving about it, said it was phenomenal. My first ever event was in Arizona almost 2 years ago, and that completely rocked my world. And so the next one, guys, the next big one is happening in Monterrey, Mexico. When you log in, I'm going to show you exactly how you can find it if you want to know more about it, because we've already got about 15 from our team here in New Zealand going. So let me just get this sharing sorted. Oh, excuse me, sharing. There we go. There's more dream getaway stuff in Cancun. That's just been listed as well, so you can go in there and look at the details for that. But when you log in, guys, to the site, it's currently saying that I made it. My dates got all messed up, but I did qualify for it a while ago. Here we go. There's a new anniversary trip official launch video that you can go and watch that if you wanted to. And here you've got the Monterrey IM Transform event happening November 3rd to 5th. Guys, they sold 5,000 tickets in 5 days and sold out the event. And so they've gone to find a bigger venue. So now I believe we're going to be able to have up to 10,000 plus. So guys, put that in your calendar, November 3rd to the 1st. Tyler and I were chatting about it today. It's going to be a phenomenal opportunity for us to get together and just have another explosion of growth, connection, and all the fun stuff that happens at these events. If you haven't been to one, you'll see what the fuss is all about. In the meantime, if you do not know, if you're not part of the YouTube channel already and you're watching us on Facebook, get on my YouTube channel there. I hardly ever say this, but do the like and subscribe thing. I want to get these subscribers up to 1,000 so we can start taking this to the next level. You're going to see all of our Tuesday night trainings like tonight here and a few other ones and things that I've uploaded. And then just going along, so I had something about an announcement. So before we get to the announcement, for those of you that know what's going on with Bitcoin, the halving, this, if you don't know, takes place once every 4 years. And as you can see, guys, about 3 days and 15 hours, we'll be having the next one. And you can come in here, this is just, nicehash.com live countdown, which says a little bit about it. But basically the rewards of the miners gets cut in half every 4 years, which causes a bit of a supply shock and what we know as the beginning of a new cycle and usually the next bull run. And so, Nick Gomez broke that down super well on that recent session he did with us over here, the crypto blueprint. So get on there. And then, guys, aside from that, this halving happening in 3 days. Yeah. On the day of this halving, this Saturday at 8 in the morning, we're going to be joined by who I believe is one of the top, if not the top crypto educator in the entire academy. Guesses as to who you think it is. I have never had the privilege of hosting this man yet, but now I do. My absolute personal favorite on the crypto space. 3,086 hours of education. Mr. Curtis Cobain himself. He is going to be joining us on Saturday morning this weekend. So I'll create a flyer for that. I'll create an event for that. But guys, learning from this man live, clicking in and learning from all of his favorites videos. I cannot tell you how much I learned from this man. And so it is, why does this mean? Oh, there we go. Okay, let me just do that. Let me unshare my screen. I cannot tell you how excited I am to finally be hosting Kurt. It is going to be a dream come true to have him come on, share what's going on in crypto with us, pretty much on the exact same day as the halving, which is nuts. So guys, that is going to be this Saturday, whatever the date is this Saturday. I don't even know right now, but this Saturday coming. And if you missed it or you're watching this recording later, I'm sure that recording will be on the YouTube channel. And so, yeah, that's probably all the announcements I got for now, but super pumped for that and really pumped for this evening, guys. Tyler and I go way, way back and thankfully, live in the same neck of the woods. have done a fair amount of life together here. We've traveled the world together to events in Miami and Croatia. Both spent a good solid 3 years of our lives over in Bethel in Northern California, doing a ministry and leadership school over there, and now find ourselves here in Auckland, in New Zealand, trading together, learning together. And so he's also amongst all this. I'll get the numbers wrong, but he writes a phenomenal email every week and sends it out to, I want to say, tens of thousands of people. You can correct me on the number, but I know it's a lot inside of the organization he works with BG and Raising Royalty. And so with that, guys, he's dived deep into really researching and understanding what's going on in the world. A lot of us are investing, we're trading, we're doing crypto, we're doing all the things. But part of that learning journey is understanding what's going on in the big picture. Now, you can have a trading strategy and have your rules and do your thing. But I believe there is a real not fun. I believe it's really important, big picture, to grow in your understanding of the financial system that we live in. Whether or not you're busy trading in dollars or crypto, it's healthy to learn about that and the relationship between the two, how things are going more and more digital, and the importance of learning about that and how to thrive in that space, which is coming for the masses like a freight train. But you'll learn more about that on Saturday. But at the same time, in those emails, he's always dropped such high amounts of value. I look forward to those emails every week, and he's learned a lot, guys, and he's applied it, and he's helped a lot of people really gain perspective on what we're doing here, and in the midst of trading and investing, what's going on in the world, and how we can learn to look further ahead by learning from what's happening. So along with that, he's also taken TRENDFORCE to a whole nother level, and he's leading also a large team here inside of IM, and he's helped his team really grow and thrive with a few little hacks. And so I'm excited for him to share some of that this evening. So stacked house here on Zoom. I'm sure we'll have a bunch on Facebook as well. So Tyler, thank you so much for being with us, my man. I'm going to add you over here, and firstly to say thank you, bro. For those of you that don't know, Tyler and I had some conversations right at the beginning when I was looking at getting involved in IM, because I watched him do phenomenal things in crypto before we got here, and then jumped in, started learning together in this space, and it has been almost 3 years at this point, which is nuts. It's at least 2.5. And I'm just so grateful for you, man. Just your heart, your leadership, your family, all that you bring to our community, and I'm really excited for guys to hear from you this evening. So everyone, drop some fire emojis in the chat for Tyler, and I'm going to hand it over to you, bro. Let's get on with it. Let's go.
Cool, brother. Hey, thank you so much, man. It's always such a ridiculous honor getting to, anytime we get to hang out, but I always so appreciate your introductions, bro. You got the whole honor thing down, man. So just appreciate you, always have, always will. So and yeah, what an honor to just jump on and kind of share a bit of perspective with you guys. Like Ty said, it's been a huge privilege and blessing to actually be employed to help people understand some of the stuff that's going on in the world, in the economy. And so tonight, I think what I want to do is just cover some of the basics, do a little bit of a roadmap recap in regards to how we got to where we are today over the past 4 years, and then a little bit about where we might be going from here. So we're going to kind of just do some basics, but a glossary of terms, and then there's a lot more to this, guys, but I'll keep it simple. To start with some of the basics, we just cover. We'll start with inflation, right? So inflation is something you guys are all well aware of, even if you don't understand it. But inflation is, you'll probably have noticed that the cost of your groceries have skyrocketed, and your rent payment has gone up, and everything costs more now. And why is that? What's happening? What's going on? Well, inflation, the most basic form of it, it's just when prices go up, right? But why do prices go up? So there's a whole lot of moving parts to this, but the most basic reasons why prices will go up is when there's more demand than there is supply for something, right? So that's just economics 101. So if there's more people who want to buy this mug than there are mugs to buy, then the cost of this mug will go up. And so that's inflation. That's the most basic, explanation of inflation. The other thing that will cause prices to go up is when money is created out of nothing or out of thin air. And so that isn't so much the value of this mug going up, it's the value of the currency we used to buy it going down in relationship to the value of this mug. So, supply and demand makes the actual value of this mug go up. When currency is created out of nothing, then the actual value of the currency is going down in relationship to this mug. So there's two different things happening. Those are the basic causes of why inflation goes up, or inflation happens, prices go up, right? So that's inflation. Now, there's this little group of people in America. They're called the Federal Reserve. Real dodgy backstory to them, guys. If you ever want to have some insightful, enlightening research in your own time, go look up a documentary. There's a book, but it's also online. You can look it up. It's called The Creature from Jekyll Island. It's about how the Federal Reserve got started. Most people don't know this, but they're not actually a government organization. They operate separately to the government. The government is actually, in a lot of ways, subservient to the Federal Reserve, not vice versa. So there's a little fun fact for you. I didn't know that for a long time. But one of their jobs, their original mandate, by the way, their original job is to enhance the stability of the banking system. So their primary role is to make sure that banks are taken care of. It's not actually to look after you and me. One of their other jobs that they at least say they want to achieve is making sure that inflation doesn't get too much out of control. And so there's this thing called an inflation rate. And so inflation rates go up, they go down. I used to think that when inflation rates go up, it meant, well, obviously prices are going up, inflation rates go down, prices are going down. But that's not actually how it works, So the inflation rate is basically just the rate at which things are costing more and more and more every year compared to the year before. So the inflation rates are accumulative, right? So if you look at the inflation rate here in New Zealand right now is 4.7%. That means that things on average cost 4.7% more than they did a year ago right now. And then if you look at the inflation rate from a year ago, it means that whatever that was is that much more expensive than it was a year before then. And it keeps getting added every year, it gets added to the year before, added to the year before. So, so prices are basically always going up. It's just the question of how quickly they're going up. So that's the inflation rate. And so you're always having these big news events that come out during have you actually got me on the screen there, Ty? I don't know. But I'm sure you can hear me anyway. But
Yeah, you're
so
good. If you're on speaker view, you'll see yourself because I've pinned you. You're the only one I can see.
okay, cool. All good, man.
Individuals can change that, but you're live streaming and it's just you.
Right. So you got the Federal Reserve, you've got inflation, you've got inflation rates, and then you've got interest rates. So there's a lot of different levers that the Federal Reserve can pull on to try and keep inflation down. So they say they have a goal to keep the inflation rate to get it back down to 2%, right? So currently in the States, it's around 3.5%. They're trying to get it down to 2%. And one of the ways they do that is with interest rates. So, so interest rates, basically when they raise interest rates, it hurts the economy. When they lower interest rate, it helps the economy. And so when inflation goes up, they raise interest rates to basically damage the economy in hopes that there becomes less demand for things and then prices will at least not rise as quickly as they have been. Now to clarify, this is just another little fun tip for you. They don't actually have any intention of getting prices back down to where they were 4 years ago. That would be called deflation, and that's something that they're actually very committed to prevent from happening. They don't want deflation. They want inflation. They want prices to always be going up and up and up. They just want to get the rate at which prices are going up to happen a bit slower than they are right now. So if you're hoping for prices to go back down to where they were, that's probably not going to happen at any point. Sorry to break it to you. So you've got interest rates, right? So you've got inflation rate, you've got interest rates, which basically damage the economy. How do they damage the economy? Well, there's quite a few ways. You know, one is banks, so banks are really hurt when interest rates go up, right? Because banks make money by giving out loans. And so when interest rates go up, not as many people can get a loan. And also not as many people can pay back their loan. So that means they're not creating as many new loans, and they're also having a lot of defaults happening. So it hurts the banks. It hurts businesses because businesses have to rely on debt a lot of times for their operational expenses because there's usually a lag between when they have to pay bills and when they get paid, right? So that gap fill is it's filled with debt. And so the more expensive debt is, interest rates, the more expensive it is to service their operating expenses with debt, which means they have less operating expenses, which means people get laid off. So it hurts the economy. It also hurts the average person, you and me, in a lot of ways. Because when interest rates go up, I know a lot of you will be experiencing this right now. If you don't have a fixed rate on your mortgage, your rates probably have gone up a lot and what you're paying from month to month. It affects renters as well because when new investors come into the market, they buy a house at the current rate and they have to make money. They need to get paid. So in order to make that transaction make sense, they have to put the rent really, really high to cover the cost of the interest that they're paying on their loan. So rent goes out of control. So rent goes up, people have less money. If you have any consumer debt like credit cards, that's going to be really high right now. The cost of any consumer debt you have is going to be very expensive to pay back. So there's a whole lot of ways raising interest rates basically slows down the economy. Um, so so let's just do a quick little recap of the last 4 years and how we've gotten to this point. Right. So 4 years ago, this is all going to tie together. So just stick with me. You have, just about 4 years ago now, you had the pandemic. Everyone gets locked in their homes. Everyone gets shut down. And so the economy basically turns off. And so the Federal Reserve, they want to stimulate the economy, and at the same time, they also want to help people by giving them all these stimulus checks. So what happens is the supply chain gets shut down, right? So access to goods supply is pretty much almost cut off. And then all of these people get checks deposited into their bank account in the form of this free money. So you have demand skyrocketing and supply plummeting, which causes a shock to the system. So prices skyrocket. And then not only that, but you have money being printed out of thin air. So you've got all the contributors to inflation happening not only at the same time, but in extreme amounts that we've never seen before in history. So inflation goes completely out of control. So during this time, interest rates were near zero to help stimulate the economy, get things back on track. They're printing money. There's demand going crazy. People want to spend their money. Supplies is broken. The chains are backed up and backlogged. So you've got inflation just soaring out of control. And then so the Federal Reserve says, oh, we need to start raising interest rates, right? So they start raising interest rates to try and get inflation back down. So over the last 3 years, they've raised interest rates to a 20-year, basically a 20-plus-year high in hopes of getting the inflation rate back down. By the way, when we say 3.5% in the States or 4.7% in New Zealand, where we are, the actual interest rates numbers are going to be much higher than that. That's what's on paper. A lot of experts say it's more like 3 to 5 times higher than that in reality. Um, so you have interest rates go up in hopes to get the inflation rates back down, which is how quickly things are rising in price, and so they started to trend back down, right? So they started to trend back down, and so the Federal Reserve came out um, towards the end of last year and said, "Oh, we're gonna cut rates next year." Now, lower rates are good for the economy. So what happens? The stock markets exploded because the big players assumed that that was going to be possible because of what the Federal Reserve was saying. So there was all these essentially people gambling on this assumption, on this pretense from the Federal Reserve that interest rates would get cut this year. But the problem is that um, over the course of this year, the data on inflation is now trending back straight up. And so the Federal Reserve is going, actually, we might not be able to cut rates as much as we hoped, if at all. And so that's a whole separate issue we're not even really going to get into, but it could create a huge problem because the stock market's basically a bubble right now. If you consider the fact that there's all this capital in the markets based on an assumption that will now probably not happen. So there's a bit of a problem here that the Federal Reserve has, is they've raised rates, um, and everything's gone out of control. Inflation's gone out of control. They're trying to bring things back into control, and they can't get a hold on it. And so now inflation's trending back up. There's a whole lot of reasons behind why it's trending back up. If you're following my emails, you'll know more about that, but just want to keep it basic. And so they basically have to choose now, but they have a choice between, do we help the average person by actually raising interest rates, which is still in a way not helping the average person because if they raise interest rates, what's going to create a recession, right? So that means raised interest rates creates recession. It gets inflation to come down, so things aren't going to be rising in price as quickly. However, you're going to have businesses going out of, companies going out of business. You're going to have banks falling over. You're going to have, you know, tens of thousands of people getting laid off. So I say all this to get to the point that we have a very interesting fork in the road right now, in the sense that, the Federal Reserve has a choice of whether or not they're going to raise interest rates and basically create a, a pretty, probably pretty dramatic, significant recession. But in the long run, it helps bring inflation down. Or are they going to cut rates, in which case the cost of everything that we're paying for skyrockets. So those are the choices. It's not a great fork in the road, right? So one direction, recession. The other direction, extremely high inflation. So the Federal Reserve is kind of gotten their foot caught in their mouth a little bit, like going, oh, well, we said we were going to cut rates, but if we do that, it's gonna actually really hurt the banks and the economy overall. But if we lower rates, then it's already trending, up quite significantly even without cutting rates. Um, so that's kind of where we're at right now. It's like it's not, nobody really knows how to get out, how to solve the problem. It's A or B, and they're both kind of terrible. Sorry to be the messenger of gloom and doom. It's the reality. So, the other thing that's really important to note, that's kind of probably the biggest story right now in regards to the economy is, if you look back at the 2008 global financial crisis, that was caused by basically the banks um, betting everything on the real estate market, not seeing that there could possibly be a problem in the future, and everything tipped over. Banks crashed and the economy crashed, and it was all based around real estate. Well, we essentially have all the same ingredients playing out right now, but instead of residential real estate, it's commercial real estate, and the numbers that we're talking about are actually much bigger this time around. So what happened was in 2001, when 2020, 2021, when all the stimulus got pumped into the economy, well, where did that go? It went into people's savings accounts. Well, what is the bank's job is to take the money in your savings account and invest it and give you a return at the end of the year. And so at the time, what looked to them on paper like the best investment was commercial real estate. So you had literally trillions of dollars getting pumped into commercial real estate investments around that time. Um, what they didn't foresee was this whole thing of people staying home and working from home to be something that stuck around and lasted and kept going. And so what's happened is you had trillions of dollars get pumped into commercial real estate by the banks. And then you had, at the time, interest rates were near zero, and then they've gone up to over 5%, and which is a big difference. It's a lot different than near zero. And when you're talking about, hundreds of millions of dollars, sometimes on a single building, that makes a huge difference. So you've got these loans, which, oh, and by the way, commercial real estate doesn't operate the same as residential real estate. The mortgages aren't, the rates aren't fixed like they are in many cases in residential real estate. So they're constantly updating. So commercial real estate, the owners of those buildings are going, I can't afford to pay, even with a full building full of offices, I can't afford to service this mortgage. But then what you have now is you've got all of these people, the tenants of those buildings, saying, well, I can't afford the rent because you've raised my rent to cover your mortgage, but I don't need this. Like, my workers are fine working. When we did a whole year of working from home, it worked for us. Everything's fine. Let's just keep doing that. So that everyone's canceling their tenancy agreements in their office buildings, and the owners of these buildings can't fill them. And you have this huge problem right now because who holds that debt? It's the banks that hold that debt, right? So you have an owner of that building who has a mortgage out with the bank, but if they can't pay the bank back, the banks are the ones who are left out to dry, right? So in many cases, you have these hundreds upon hundreds of millions high rises going into liquidation, and they're being sold for less than half of the debt that's against their value just on one building. And every single city across the world basically is going to be having the same problem right now. And the banks are going, how do we restructure this debt? I mean, maybe a few of these buildings we can restructure, but at what point do they go, what do we do? There's just in the States, there's $3 trillion worth of um, commercial real estate debt. 3 trillion. That's almost 10% of the entire US debt. Almost 10%, and on the US debt, separate point, 4 years ago, the US debt was right around 23 trillion, and now it's at 34 trillion. It's gone up almost 50% in the last 4 years. That's insane, So that's just money printing, and which is devaluing the currency, that's anyway. So all of these commercial real estate loans um, are due for basically restructuring of some way, shape, or form over the next 3 years, 1 to 3 years, where they're going to have to either, default or they're going to have to pay. And they can't pay. And so the banks have a really big problem on their hands that nobody really knows how nobody knows what the solution is. But it looks very much like all the ingredients for another financial crisis, because there's going to be even the chair of the Federal Reserve came out recently and said there will be a lot of banks fail. There's no way around it. So so you have this one issue with inflation and the interest rates and what do we do, and then this other, probably the biggest story right now, is with commercial real estate and the banks, and how are they going to deal with these foreclosures that are going to happen. And we're talking trillions of dollars worth of money. Who's going to pay that? So yeah, so I guess um all that to say, I guess that's just a bit of a recap on where we're at. I'm sorry that it's not cotton candy and rainbows and unicorns. But what I've been saying to the people in our community is, we would rather tell you the truth than try and fluff up your feelings and make you feel happy tingles. We would rather have the real truth of what's happening, so that you can then take inventory of your situation and go, um, do I need to make some changes? How do I keep up with what's happening here? Um, because there's a real chance that either we're going to have a very real recession, or we're going to have a lot more inflation, you know, a lot more. Um, all that to say, I am really excited about some of the things that we have access to, and one of those things is this software, this tool that we have very graciously been given access to by Ty's dad, Tim. Bless that man. I do not know what he did to create this piece of software, but my goodness, is it powerful. So, I got access to this thing when it came out, and I started watching it and just observing. Always a little bit skeptical of indicators, to be honest. Like, there's a lot of strategies out there, but the general consensus around indicators is they're lagging. And so I kind of thought, oh, that's probably going to be the case. But we'll see, we'll see. But time and time and time again, going, wow, it worked again. It worked again. It works. This is interesting, And um, so I guess to try and condense my last few years of learning, I've learned a lot. Spent thousands of hours learning, trading strategies and everything. Well, not probably not everything. There's always more to learn, right? But it feels like I've learned a lot. But the problem is that the more you learn, the more opportunity there is to overcomplicate what you're doing. There's more question marks or can pop up. So, I had so many different strategies I was trying to perfect. And I was just like, man, I just need something simple. I really would love something simple. And I thought maybe there's some sort of way that I can utilize this piece of software, TRENDFORCE. And a couple of months ago, I just felt like I had this download from the Lord. And it was just like, hey, try this. And I just had this sense of relief come over me, because I was just like, relief and also skepticism, like, that is too easy. That couldn't actually work because it's too simple. Like, I'll give it a try, okay, but could it actually work? That seems just too easy to me. It's because what I've learned is very like, you're looking for all these complex patterns, and it's great, and they work, and it's awesome, and it's worth the time to learn those things. But I just thought, man, could it really be that simple? So I then went on to share it with my team, who I'm leading, and they're now seeing some incredible results with it. And so I just want to give you guys kind of a sneak peek of what it looks like, if that's okay with you. I know that we will probably have a lot of traders on this call, whether it's live or watching later. So this might be helpful to you. Something that I've been using as probably one of my primary, if not my primary, approach to trading markets from day to day. So I'm going to share my screen with you. Give me 1 second. So 1 second. Oh, did it do it again? Oh no, that's good. All right, here we are. So give me 1 second here. I'm going to share my screen. So I'm going to try and keep this as simple as I can. Um, I might get a little bit techie nerdy, a little bit. And so, because I know there are some traders on this call, so I might just include a little bit extra for those of you who understand some of this stuff. Um, so I know we've covered this before, but this down here, this is TRENDFORCE. We've got these three different sections. You know, you've got this bar, horizontal, you've got these vertical bars, and you've got the dots. And then up here you have these different, what they're called moving averages. And so I have been using for a long time these moving averages that we have used with sniper vision. So it's the 20 moving average, the 50 is the blue, and then the 238 is the orange. So some very basic rules, but basically I'll try and keep it simple. It's actually, I mean, I feel like anybody could do this. It's so simple. But I felt like the Lord said, you know, so this is a 1 minute chart here. This down here is a 3 minute. It's a different pane down here, and it's a different type of candle. It's called Heikin-Ashi. So it's pretty simple to set this up, but this is 1 minute standard candles. This is 3 minute Heikin-Ashi. All I have is the TRENDFORCE bars. So I felt like the Lord said, just wait for 5 out of 6 colors to agree, a bright color to agree. 5 because there's 3 here, right? 3 here, and then 3 here. So there's 6 altogether. And then I felt he said, wait for 5 out of 6 to agree and wait for an engulfing candle that rejects an EMA. And that's it. That's the whole thing, right? Except, I mean, the other thing I'd say is, you know, there's another rule I have where you don't want to take a trade that's on the wrong side of this orange line, the 238, right? So you kind of want to stay with the trend, which means if the price is below this orange line, you're only taking sell positions or short positions. If the price is above this orange line, you're only taking buy positions. So we'll just go through some actual examples from today. So this is this morning. This is gold. This is a gold chart. This is 1 minute. Now, most people wouldn't trade a 1 minute gold chart because it's, you know, a little bit volatile, but this seems to work. So you've got the 1 minute, the 3 minute, and so we wait for 5 out of 6 to agree. This is about the time I woke up. And so let's see, where does it go 5 out of 6? In agreement right here. This candle right here is 5 out of 6. So we have 3, 1, 2, 3 green. And at that same point, we have 2 out of 3 green. So I'm looking for a candle that rejects an EMA and engulfs the one previously. And I'll show you what it looks like. It looks exactly like this right there. Right? So see how the price comes down and just touches that red line. So it's basically like a red candle followed by a green candle that's bigger. The body of it's bigger than the one before, right? So it looks like that. That's called an engulfing candle, and it's rejecting a line, rejecting an EMA. So, and if you look at that point, what do we have? We've got 2 out of 3 on the 1 minute and 3 out of 3 on the 3 minute Heikin-Ashi. So 5 out of 6 here. There's your engulfing rejection candle. That's pretty much the whole strategy. And what happens after that? You know, you could set this up, set a trade up, you put your stop loss probably down here. You'd get quite a lot out of that if you wanted to take the whole thing. That's probably 1 to 3. So you're risking 1% in this red box to make 3%. So that's pretty good, right? So you just keep doing this now. You just keep going along, going along. Okay, let's see here. Is this was a 5 out of 6 engulfing rejection. See, here it is again. There it is. See, it doesn't see how over here the body closes below the red line? That doesn't count. I want to see it bounce off of it like it did. See, bounced off here, bounced off there, bounced off there. But see how it's touching the line, can't close below. Then it goes below and then engulfs. So there's that pattern again, exactly what I look for. So there it is. Boom. And then you look down here. What do we have? We have 3 out of 3 and 2 out of 3. So 5 out of 6. So there's another trade. So you go boom. And this is just super simple, guys. This is like, I feel like anybody, it's just like if you can see red and green and that's bigger than that, and that's, you can count to 6, 5 out of 6, you know. So that's, that's another trade that you would have won. But then you have another one you could have entered there as well. See, if you didn't get in there, you could have got in here. See, there's another example. See, it touches the line. That one's engulfs, rejects it, engulfs. That one's bigger than that. And we had 6 out of 6 on that one. So 3 out of 3 here, 3 out of 3 there. So 6 out of 6. And so there's a third trade. If you'd entered all those, there's 3 trades you could have won. Here it happens again right here. That's a bigger candle, but it still follows the rules. It comes down, just barely touches it. And then that one's bigger than that one. And what does this say? 6 out of 6. Well, you would have won that trade too. So there's 4. Now there's 4 trades. You don't usually get strategies that work this well, especially if they're this simple. It's weird, guys. It's just, I've never, it's very unusual to see things like this. That kind of, yeah, that pretty much counts, except you would have lost that trade. So now well, you're 80% win rate now, 4 out of 5. You just keep doing this. Okay, so now we've gone back above. It's probably gonna get boring for some of you guys, but I mean, technically that right there, that this candle, that would have counted. Comes down, that candle rejects the line, it's bigger than that one. You're 5 out of 6, and you would have won that trade too. So, you can see it just happens over and over and over. So that's, I mean, yeah, you're just trading this one thing today. You would have had 5 out of 6 trades. You would have won 5 out of 6, and all of them were about a 1 to 3. So you would have, if you just followed just this simple strategy, wait for 5 out of 6, an engulfing candle that rejects an EMA. Just this morning, you could have made, just on this one thing, you could have made 14% account growth just this morning, just taking every single time that it you had a candle that engulfed the thing and it's 5 out of 6. So it's just, what I love about it is that it's so simple. It's like I used to be looking for all these complex patterns and head and shoulders and trend line breaks and but now I just look up here when I'm trading and go, do we have 5 out of 6? And if we don't, I'm just saving my brain capacity. And so by the time a trade setup happens, when we get 5 out of 6 down here, now I'm really watching. I'm going waiting for something very specific to happen down here. See how price interacts with these lines, and then when it happens, I push a button. See here, you could have gotten a bit. No, that wasn't 5 out of 6. See, this trade wouldn't have quite worked, but it was a 4 out of 6 right here. See, if you look down here, at that point, we have 1 out of 3 and 3 out of 3. So that's not quite enough. So it's just, I mean, I could get a lot more technical. I just want to try and keep it simple. You still would have gotten a 1 to 1.3 out of that trade, which isn't bad. So I guess you could still count that as a win. But and then if you go over here, this is a different asset. This is the US 30. But you can see it happen. Oh, it's the same thing over and over. You're waiting for 5 out of 6. You get it right. Um, right here, you're 5 out of 6, and it happens to be, there it is again. Just that's candles bigger than that one, touches the line, engulfs, and then it drops off a cliff, and then you wait for it to happen again. Happens again. Next time it happens is right here. and you're 5 out of 6 here. So there's that pattern again. I mean, I think you're getting the point. I'm probably being quite redundant and getting boring, but I want to make sure people understand this because there's been a bit of confusion in my team. So if there's anybody here watching, this might be good clarification, but you know, that's what it looks like. Price touches the line and rejects, engulfs the previous candle. If you look down here at that point, you're 2 out of 3 on the 1 minute, and over here you can see the line here. It's 3 out of 3, so you're 5 out of 6. So you win that trade. So I think I'm probably beating a dead horse, but you know, we could do this all day and just look. There's another one there. There's another one there. You know, another one there. So let me just find the screen. Let me stop sharing. Okay, so anyway, yes, things look bleak. The economy isn't great, but how amazing is it that we have people in our team who are hearing from the Lord and getting strategies and downloads about how to beat the system and stay ahead of what's happening and what's going to happen. I think I get really excited about that. So I try and make sure that I'm communicating that when I'm communicating to people. It's not just doom and gloom. There is so much that we have access to at our fingertips. We just have to actually go and grab it and do it, you know? And for those of us who are doing that, it's very exciting times. It's actually not bleak. It's not gloomy. It's very exciting times ahead because if you look at the power of, I mean, what did I say? 14% this morning just on that one thing. If I'd taken every single time that particular two condition strategy happened, which is extremely simple. Even if you just look at, you know, we've done this, you've done this, you know, 5% a week, 1% a day, let alone 14% a day. That will put you easily in a very comfortable position, even with all the craziness in the economy right now. So, yeah, it's exciting stuff. Yeah, I'm glad Tim, Tim likes my insight. Thanks, Tim. I feel honored. The Yoda, the master himself, has complimented me. So, anyway, I think that's it for me. Hope
Bro,
that's
that was
helpful
so
for you
good.
guys.
There's one question I spotted on Facebook.
Yeah.
Joe was asking, how do you get the double train force? So do you want to show people? Because that's gonna be the
Mm,
first question. People are gonna see you got two. Do you mind
yeah.
screen sharing and showing how you line those up? Because then this will be a well encompassed recording. Everyone can see
Yeah,
that.
yeah, yeah. Yeah, cool. Let me share my screen again. So share. Okay, so if you go up here, if you're using TradingView, you go up here and you just here what we'll do is we'll actually go back to one, go back to one. So this is what it normally look like. So you just go up here and you select this double pane. And then what you would have to do, normally there would be candles like this on there. Well, it's not showing up. Let me
I
double
think if
pane.
you double click it, it might add candles or take away candles,
Yeah,
possibly.
yeah, yeah. So it normally look like this. So you can just go collapse pane right there and it gets rid of the candles. And so you just add the indicator. You just go up here, indicators, you add the trend force, and then you go down here, click on the pane, then you go up here, change it to 3 minute and high Kanashi. So yeah, pretty simple. Any other questions, feel free to launch it. I hope that helps.
I'm looking, but I don't see any other ones. Bro, thank you. That was gold. Like, full house tuning in, dropping nuggets for us. That was honestly, I got a page of notes from the economic breakdown stuff. And for those of you that are new, go watch the movies, The Big Short, if you haven't seen that one yet, or Inside Job, which is the other one where it's more of a documentary with Matt Damon narrating the GFC, the global financial crisis from 2008. It'll give you insights to what happened because history doesn't repeat itself, but it sure does rhyme, and things are starting to rhyme. All that to say that what's going on in the finance space and the global economic space like that, That's one thing, but we get to prepare ourselves and get ahead of the curve and learn about what's happening in crypto, what's happening with trading, and how we're able to do that. So, firstly, bro, thank you so much for the wisdom, the thousands of hours you poured into learning and into leading others as well. Really appreciate you. It was so good to see your face in person today and to be able to have you rock it tonight with us. So, guys, drop some appreciation for Tyler, and then I'm going to do, one more thing. Are you using previous structure as TP target? Okay, one question about targets you can answer. Are you using previous structure as for targets? Anything like that before we lock it up and move on? Anything off the top of your head, Tyler, for targeting, or just going for 1 to 2s or tight stops? I know we chatted a little bit about this earlier, but
Yeah, so yeah, I have been, I'll try to keep it simple, but I've kind of just been using structure. For those of you who know about trading, so let's say, um, let's just find an example here. If you have a clear area where you know that there's going to be a lot of stop losses, like for example, there's a lot of liquidity in the form of stop losses beneath this pivot right here. So let's just say, for example, I entered off this this candle that rejected the 20 EMA and engulfed, closed below. I would be targeting that next level of liquidity where you're going to probably have a bounce, right? So I probably put my stop loss about there. And then I would put my take profit right, probably somewhere in that wick, you know, maybe at the bottom of that wick even, because I know that price always seeks liquidity. So I know the most liquidity is going to be beneath the wick of that candle there, because that's this clear pivot area. So if I did that, it would have been a 1 to 3. Now, let's say, for example, that wasn't the area where the most liquidity is sitting, and let's say it's this area here instead, and just pretend that isn't there, but this is the low point, then I would have targeted that instead, which would have been a 1 to 2. So if I can't get at least to 1 to say 1 to 1 point, risking 1 to make maybe 1.5 reward, then I probably won't bother taking it. And then there was another question there about what is an engulfing candle. Pretty simple. It just basically is a candle with the body of the candle. So the body is from this point to that point is bigger than the one before it. So an engulfing candle, by definition, is going to be an opposite color to the one before it, right? So this is a red candle that closed here, this opened here, and then closed there. So the body of this candle completely engulfs the body of that candle. So this candle right here, that is an engulfing candle because the body is bigger than that one. So I think that was answering Kathy's question. Now, context is everything in trading. So if you get that kind of engulfing candle in the right context, if it's with the trends and all that. So let's say it's, this didn't quite touch the EMA there, came pretty darn close to it, but this candle, the body of this candle is bigger than that one. So there's an engulfing candle there. And this is kind of the look of what I look for. This is another example here. It touches the line, that rejects the line, and this candle engulfs that candle. So because the body is bigger, this body's bigger than that one. So Kathy, I hope that answers your question. Let me just see if there's any more questions in the chat. Stop share. Nope, I think that's it.
Thank you, good, bro. People's minds are blown.
Yeah. Okay.
So appreciate you, man. Thank you for taking the time, breaking it down, sharing your heart, and all those goodies. Really appreciate it. Guys, drop some love in the chat. I want to show one more thing. But yeah, drop some love in the chat for Tyler. Let me, I'm going to take the screen back. Oh, goodness, how do I do this? I'm going to unpin you, but I'm going to find you again to unpin you. There, and all right, there we go. Bro, thank you. Thank you, thank you, thank you. Let me pin myself. There we go. All right, guys. Well, if you are, if most of you probably got TRENDFORCE already, if you're part of our squad, if you're not, and you're watching this recording or watching this live, you're not part of our team with the academy, then Dad created TRENDFORCE. He spent stupid amount of time and hundreds of lines of code coding that thing at the bottom, which we're able to apply to any strategy on the top. So Tyler was showing the EMAs that we have with Sniper Vision, which is one of our scanners that we utilize, one of our strategies. There are other ones that some of our team uses, whether it's dynamic edge from James Leone or things that are happening on Orus or Train Trap, whatever. There's a lot of opportunities to have a strategy on the top. It might be smart money concepts, which Tyler was talking about a little bit tonight. Whatever that is, TRENDFORCE can give you those kinds of confirmations. Just simply what he just said there with those 5 out of 6 with a 1 minute and a 3 minute. Brilliant idea to take a look at that and go back test. But if you want access to TRENDFORCE, we didn't want to charge people for it. So anyone who's part of our team got an empowered pack, you get it for free. You just got to let me know and I'll send you a link to an application form. And then I've got your TraderView name and I can share it with you that way. And then you get access to that. So that's how you get it. The last thing I want to show you, if you, where am I? There we go. Share my screen and jump on to here. Not there. Where am I? To that one. So guys, on here, like I said, there's Sniper Vision. Those are the EMAs that Tyler was showing before. Orus is another one of our scanners specifically for gold. Really, I recommend going to take a look at that. That's what I'm busy doing at the moment. And then aside from that, guys, compound calculator. If you want to know what we're actually talking about with investing versus trading, most of you get the investing game. You put $1,000 into something like Bitcoin, Air New Zealand, Tesla, whatever. You're praying that that thing goes up. And if it goes up 10%, you make 10% on your money, you would have $100 in profit and you walk away with profit. That would take, to get 10% on an asset, aside from Bitcoin, in the stock market can take a while. I think if you're in the stock market for an average of more than 5 years, you might get 8 to 12% per year, depending on the seasons and the when. But on average, over time, you could be getting that. So what Tyler obviously showed you was more than that in a day. But trading for us, I mean, guys, whether it's 100, 1,000, or 10,000, it doesn't matter. Add a zero or minus a zero from the starting balance to the finishing balance. So 1% per day across 1 year, not doing the weekends, so just 5 days a week. That's the same as saying roughly 5% per week. And so you're basically 13x. So you'll see how you're starting on 1,000, you'll end on 13. Same thing if you're starting with 100, you'll end on 1,300. If you're starting with 10 grand, you'll end up on 130 grand. That's basically 5% per week or 1% per day, 5 days a week. And you can go in here and break this down. You can look at it monthly, weekly, daily. You can see your wins and what what your 1% is. Because for when we're trading, like what he was showing with the red box and the green box, we show up and we risk 1%, maybe 2, maybe 0.5% of our fund, of our self-managed fund. Instead of putting 1,000 into one thing, we put into a trading account that we manage, and we take 1% of that and we see a trade opportunity like Tyler just highlighted, and we say, right, I'm risking 1% right now on this opportunity with the goal of making 1 to 2, 1 to 3, etc. And if you do that, you risk 1 to make 2. Obviously, if you took 5 trades in a week, say you took 10 trades in a week and 5 of them lost and 5 of them won, you'd be losing 5% because you risked 1% 5 times. So that would be 1, 2, 3, 4, 5 losses, 5% gone. But if you took 5 wins, which honestly is a horrible win rate, but still profitable, 5 wins would get you on a 1 to 2 would be 2, 4, 6, 8, 10. And so minus those losses of 5%, you'd still end up with that 5% for the week. And some weeks are going to be better than others, depending on what the market's doing. Sometimes it comes down to our psychology and our sleep and how we manage ourselves. But this is what's possible, guys, is just coming in this space. I mean, depending on what you're starting with, that's the thing. It's going to be relative. But I'll keep it on 1,000 and I'll put it on 2 years. And you're basically going to 13x on top of that 13x. So we got to 13K the first year. And then 13K basically times another 13 gets you on 180. So even starting with a relatively small account, this is what's possible. You put it on 3 years, it's not point even showing you. Life gets crazy. So with that, guys, I'm going to unshare my screen. But in case you're brand new and you want to see what we're doing, I mean, these are educators that are teaching us on the day trading side daily and live. Then they also have got their specific scanners like Orus or Sniper Vision, whatever we want to use. But basically the main thing is we're tapping into live educators, learning a strategy that's already proven, doing a boot camp, whether that's any of these top guys. So Evan Cabral, him and Daniel Lopez, they teach the Aura strategy. We've got Dr. Josh Lee and Brandon Boyd, they teach Impulse. There's Jay Awald, to give you an example, click on him. and favorite sessions. That's what it looks like to go learn a strategy, guys. He's got 7 videos here that are ranging from 40 minutes to an hour-ish, and he's going to break down what it looks like to utilize his strategy, his way of approaching the markets, and then from there you're able to decide, okay, is this the guy I want to follow? Like, spend an hour or two learning from Jay, spend an hour or two learning from maybe Dr. Lee and Brandon, or maybe Evan Cabral. Find the educators that you resonate with, the scanner that you resonate with, and then from there you're able to bolt on TRENDFORCE like all that we are doing, and it takes whatever they're doing to a whole nother level, which I'm sure you saw tonight. So our goal is to keep this as simple as possible. Tyler, thank you. Thank you for those simple rules. 5 out of 6 for the way that you approach it. Obviously above or below the 238 moving average, and looking for that rejection of a line in golfing. That's massive. I love how it's bringing in aspects of dynamic edge that we've learned a lot of together, and sniper vision, bringing it in together to make some wonderful hot sauce and profitable hot sauce of that. So I want to check questions, a few more little things down there. I think it's mostly thank yous, but yeah, guys, thanks so much for this evening. Thanks for being with us live. Let's just see, not available free, but upgrade it. Okay, yeah, so if you're wanting to double pane, look at more than one thing on TradingView, you might need to have a paid subscription for TradingView. You can get away with a lot with a free account. You can have multiple indicators, but if you want to have, I believe, 2 indicators, and you may not be able to split your screen on the free account. But guys, if you want to do this at a big level, the minimum, I think, cost for a TradingView subscription is probably like $100 a year or something. And we're all approaching this from different angles. But if your goal, depending on what your goal is, if it's to replace your full-time salary within the next 1 to 3 years, whatever it is, then take this thing seriously, guys. Like, investing in your education is step 1. It might cost you a few grand a year with the academy, unless you get it for free by just referring 2 friends. There's an option, and at that point, then you invest in some tools. Like, when I got started, I just had a laptop and I only had my phone, and I used that. I didn't have any fancy screens, I had no fancy cameras, nothing like that. Eventually, I upgraded. I got my first bigger monitor. Then I got a much bigger monitor, and as you go, you're gonna be like, okay, I'm doing this. I'm selling my bike, or I'm selling my this, I'm doing that. And the level of intentionality that you put in this, where your focus goes, your energy flows, and that's where your results will show up. So, you can start with whatever you've got, but obviously you can progress. And so I do highly recommend at some point in this journey getting a paid TradingView account. It does make things a whole lot better. You can have alerts, extra indicators, all that stuff, but it's not necessary when you're absolutely brand new. And I wouldn't suggest that when you're brand new in your first 2 to 3 months, diving into try to involve TRENDFORCE either. You could quite easily just start by learning some basics, learning a strategy, and then laying it on afterwards. So with that, guys, I want to wrap it up there. Enjoy the rest of your evening, the rest of your week. Like I said, again, huge crypto education call happening this Saturday at 8 a.m. New Zealand time with Curtis Cobain. That's going to be massive. It is on the day of the halving, I'm pretty sure, which is going to be historic. So share that with some people, guys. Invite some friends. They're going to have their minds blown by what is going on in the crypto space, and how we get to learn about that and profit from that and set ourselves up, and not just us, but the generations coming behind us. So with that, guys, we'll leave it there. I'll can the stream, put on a tune, and say goodnight. Thanks again to Tyler and everyone for tuning in. We'll see you in the chat, and if you're ready to get started, get back with who've invited you here, share this link with you, and we'll help you get on the learning journey and get you making money with your money instead of trading your time for your money. So with that, guys, good night.